Hi, Larry Gaines, PowerCycleTrading.com. Have you been looking for a cheap way to buy insurance on the market, expecting a pullback or a sell-off? Well, in this video, I'm going to show you a couple ways to do that. First off, though, let's evaluate the market. So here's the NASDAQ 100 QQQ, and this is a weekly long-term chart. So what you're seeing here is these are some indicators I use. These are called extreme range bands. So it's based on like 3 standard deviations, and this is a weekly. So you can see how price here on the QQQ has really expanded to the upside of this channel out of it and above these extreme range bands, and it's about 35 to 40% above the 50 simple moving average. So this is about as extreme as I've ever seen it, even going back to 2000. We've got a reversal signal here, okay, that arrow, so that's showing a signal for a cycle reversal. So that told us yesterday to be aware that this market could sell off. And then the next question is, okay, how do you protect yourself? Well, so let's take a look. We could do a couple different things, but I'm going to show you in this video today how to protect yourself on the S&P 500 using the SPY and doing what we call a butterfly spread. So this is what I call kind of a tactical hedging strategy. So first off, you want to look for where's the key support. So if we just look here visually at the S&P SPY, you can see support is right here coming into this price action right there. So around $340. Currently trading right here about 345, 347. So the first target would be 340. Now, if that breaks, then the next big target is going to be this swing low here at about 335, and then down to 330, and then down here to roughly 330. So let's call it 340 and then 330. So the first tactical trade we want to do is to hit this support. So we could do this targeting 340 using a butterfly, and we can do this with a really cheap low-cost trade to do that with high potential reward or risk based on our risk that we're putting up. So much better than in buying outright puts or put debit spread. So let me show you how this works. So you could look at or say, okay, what I could do is go out and buy the 18 September option expiration monthly, buy the 345, 340 targeting here. Well, right now that costs you about $177 per spread. So if you did one, and your potential profit's 326. So your potential return here would be a little bit about 170, 180% return. So risking $1 to make $1.80. The other problem though, this is going to have negative what we call theta. So if it goes sideways, you're going to start losing value. So the better way to really optimize this trade and give you much better protection is to do a butterfly. So let's take a look at that. So I could go out to the monthly series here. I could do the 18 September. I could buy the 345 put, sell the 340, then sell the 340, buy the 335 put again. So this is what we call a balanced butterfly. So one spread would cost you about $48 per spread, with the potential profit of the spread width of $5 less your cost here. So potentially at expiration on the 18th, you could make over about $450 on your risk of $50 or $45 here. That'd be like a 900% return. So 9-to-1 versus doing a put debit spread. So you could do this series here, and if you wanted to get even more protection, you could do both series. You could do the closer in 11 September series, and then you could also do the 18 October. So your total cost of the trade would be roughly $100 to make potentially $300 or more. So this is a really good way to buy downside insurance. And if you're wrong and the market goes up, you're just buying an insurance policy, and your cost of that insurance policy is about $40 to $50 per spread. And that's a really cheap way to protect downside. And then if you want to do it further out, you could take the next target to 330. So I hope this helps. And if you'd like to learn more about these types of strategies, make sure to sign up on this link. Just click on the link here and you can register for any of my free weekly webinars on options. So good luck trading.